But this is the stock that we're here to talk about today. This is stock number one of two. I got a notification from the Robinhood app on my phone that Celsius was down over 5%. What did I do? I bought it. I bought Celsius. I just clicked on it. Very easy, very simple. Laying down in bed, just bought, a couple hundred, almost $1,000 worth of Celsius stock, trying to get my dollar cost average down. So Celsius presenting a great opportunity. Their forward PE ratio is 18. Current PE ratio is 72. I wouldn't pay attention to that. There's some rebalancing going on. Market cap of 7.5 billion, 52-week low. We're sitting right around it right here. And 52-week high of 66. So this is an abstract approach to how I'm investing in Celsius and the growth opportunity that I see for them. So take this with a grain of salt. This is not a straightforward path of investing into Celsius, looking at their financial sheet as I usually do. I wanted to switch it up a little bit, but Celsius is a top 10 beverage company. Very impressive. Just to be in the conversation for that, Celsius has come so far. And we look at this right here, I circled Monster Energy. This is a very close competitor to Celsius along with Red Bull, but Monster's a little bit easier to talk about and show because they're actually a publicly traded company. But this is Celsius. This is how fast they grew since acquiring Alani Nu. This was a great acquisition for the brand. They've done amazing things with it. And there's a lot of growth channels that this has opened up. And same thing with Rockstar Energy. I think in the long term, that's going to be a good investment. But, right out of the gate, Rockstar is not the most popular energy drink in the world. So not a huge deal right there. But we see they have 21% market share, $1.45 billion in retail sales, and 126% year-over-year growth. But this is Monster's revenue growth chart. We look at Monster's revenue growth, you look at the right here. I'd say it averages in the low teens, just right above 10%, give it maybe 11 or 12, maybe 13% revenue growth is the average for the past about 12 years right here. And that's a 4X. You're in 2013, you're at 2.24 billion, now you're at 8.29 billion. So that's 12 years, you 4X revenue. And Monster's stock price has done the same. The stock is insane. But Celsius right here, you've done a similar thing. You look at it since 2016, so it's not as far back, but they're growing at a much faster clip. But obviously, it's a much smaller company. You see the numbers for them in their growth were in this company was only making $22 million in revenue at one point. I mean, if I knew the company was going to be doing this, I would have bought a lot of it, but we didn't even know. That's pennies compared to what they're doing now, as they're doing around $3 billion in revenue, which where I look at Monster, that's where they were in around 2016, and the stock price has since then gone insane. So this is the biggest difference between Celsius and Monster is their market cap. Celsius has a market cap of 7.5 billion. Monster's market cap is 86 billion, so much higher than Celsius. I mean, this is, obviously a company that is in a much better and, they've been around for a lot longer. And this is because of international sales. This is a big part of Monster. It's 45% of their sales are from international sales because Monster's popular, but, as someone that lives in America, I wouldn't label it as something that's that much popular than Celsius. I think Celsius is more popular than Monster in the US. I'm not sure if numerically that's true, but just from what I see socially, that's what it seems like. But international markets account for only 4.5% of Celsius Holdings' total energy drink sales. So this is a tenth of Monster's international sales. You got to think about that, where Celsius only sells 4.5% of their drinks. That's 4.5% of their sales are international. Almost half of Monster's brand is international. And this creates a really big growth path for Celsius in the long term. We see international segments brought in $35 million out of their $782 million in total revenue. And they have a ton of growth ahead of them. We see they have a methodical approach to international growth in 2026 and beyond. We see their market size by country, US 28.5 billion. So obviously it drops a lot. Britain 2.79 billion, Australia. So it obviously drops a lot. There's not as many people buying energy drinks overseas, and there's different brands over there. There's a lot of factors to take into account in this equation, but Celsius has a very clear path where they can expand internationally and make a ton of money. We see this is their consolidated revenue, and we look at this right there. North America is pretty much all of it. International is not much at all, but the growth that we've seen in international just over this past quarter is very, very, it gives me a good feeling as an investor, because you look at it past few quarters, 2025, we look at quarter one, 23 million, quarter two, 25 million, quarter three, 23 million, quarter four, 22 million. It's actually decreasing, but very nice jump in the past quarter internationally, so I feel very good about that. And when companies' growth stops, their PE ratios get slashed. So I used Chipotle for an example. Their growth did not stop, so I don't want to say that, but it definitely has slowed down. You see in 2020, they have this growth opportunity, this company's growing at a very fast rate, and then 2024 right here, their growth actually began to decline a little bit, so their PE ratio went down. Celsius, this is not the case. They have a lot of growth drivers in the future, and they're everywhere. You look at Celsius, margins are under control even in a hard time where inflation is hot. Like we see right here, it could get worse before it gets better. So obviously margins are something that you want to take into account, but margins do look very good right now for Celsius, and it could get worse before it gets better. There's inflation, there's oil, there's rate hikes. There's a lot of fears in the market around Celsius, around a lot of consumer stocks. So definitely something that, could go down before it starts to go up again. But long term, there's great potential for growth in Celsius, and I see the stock being a really good investment for the long term because of the price that it's at today. You have an 18 forward PE, and the company's growing like this, and you compare it to something like Monster. Is that somewhere they're going to be someday? I think so.
It's great to have you both here. Dan, I'm going to kick this one off with you. We just showed that chart of 30-year treasury yields versus QQQs. Are we overstretched here in terms of this AI tech trade and just how far it's run, how quickly?
Okay,
and I do want to say the market, in my opinion, is overvalued. I think there is opportunity everywhere, but I think the market as a whole is overvalued right now.
That's why it's so important in terms of NVIDIA earnings, because I think that's going to put just more fuel in this tech rally. We think tech stocks are up another 10, 12% rest of the year. Look, we're going to have some of these white knuckle moments, whether it was Iran, whether it's rates, special wars coming in, but it just continues to be the risk on trade because this fourth industrial revolution, like we said, it's top of the third inning, one out, and that's where we are. And I think you're going to continue to see these dips get bought.
Why do you say especially with wars coming in?
Because I think
I agree with this completely too. We're still, I think that's a great analogy. It's top of the third inning, one out. There's still so much more time in this game, and these little dips. People overplay them all the time. We see obviously inflation's going up. There's war. There's oil prices are sky high. But at the end of the day, AI is still on the run, and no matter how much sense or how little sense it makes, you can't change the price of the stock.
There's just worries. Him coming in. What does it mean for tightening? Worries about rates. If you look at just like when any time a chairman comes in, what the stocks do over the next 3 to 6 months. So there's definitely nervousness. The bears will come a little out of hibernation mode, and you'll see them scare some of the bulls. But the reality is that we are still early in this trade in terms of AI. We'll hear from Godfather of AI this week, and that's going to be just another important data point in what we see as this plays out.
Yeah.
Very true. He's talking about NVIDIA earnings. We're going to hear about that on Wednesday. So going to be a big day. And you see right here, this headline, stock futures point to lower open. S&P and NASDAQ coming off worst day since March. So it has been very, very green.
Best nicknames for all these different companies and CEOs. Vance, want to get your thoughts on this, especially given the fact that if you do look at some of the technicals, we are looking, at least within the equity markets, with oil higher, with rates having this big run up, overstretched.
It is in the short term, but I agree with Dan. I think it's sort of a white knuckle moment where it kind of gives you a little bit of pause. But just move your stops up a little bit. I think you need to be a little bit nimble. But I think Dan's spot on. I think the market's going to go higher. I think he's right that the tech trade is still very much alive, and I think any pullback is viable. Our target with.
I totally agree with this as well. You look at the stock market. Every dip is a buy right now. You're in a bull market. Everyone wants it, or not everyone wants it to stop, but you can literally buy whatever right now, and you're probably going to make a little bit of money. And this is going to keep going for a while. I think NVIDIA is going to come in, crush earnings. Obviously, there might be some fear, there might be some optimism. You never know, but we'll see.
7,800 on the S&P. It looks like we're going to get there by midsummer, and 8,000 is in the sights.
How would you be playing the tech trade right now, Vance?
I would be nimble, but I would be long tech. I'm very bullish on it, and I can't see tech going. I think we're going to get a pullback here, maybe 3 to 5%, which would actually be a gift. It would give us a chance to add to some positions that we like.
Exactly that right there. It is a gift to get a pullback right here, and we could add to a lot of positions that we like. I really like what he's saying. As a long-term investor, totally agree.
Put some capital to work that maybe we've been sitting on cash just a small amount, and I think it'd be a good chance to take the opportunity to buy some great equities.
I do want to dig a little more deeply. Yeah. Oh, go ahead. Looks like you're ready to go here.
But I was going to say, I think Vance makes phenomenal points in terms of these dips get bought. Look what we saw in March.
Yeah.
Tech.
Speaking of NVIDIA, wow, talk about a breakout ahead of these results. Expectation that you're going to see revenue reaccelerate here in their new fiscal year, and perhaps even come in stronger than that for Q1. How do you see it?
The black leather jacket's getting ready for Wednesday because I think the street numbers still are underestimated. We think anywhere from
NVIDIA has beat, I think, on the past 23 out of 25 earnings, if I'm not mistaken. So not a crazy bold take from him to say that.
From 15 to 20% over the next few years, because everything we've seen from our checks in Asia, from Taiwan, show demand and supply 10 to 1 for NVIDIA chips. You've seen it from AMD, TSMC, just go across sort of the food chain. And I think this is really going to be another breakout moment relative to the AI trade. I think investors are still, especially when it comes to physical AI, think about the China trade, when you think about H200s, that's not factored in. And look, the godfather of AI speaks. You'll hear a pin drop on trading floors because that is the most important thing in this market.
Vance, I mean, we also have a market that seems to be continuing to shrug off geopolitics here. For the most part, yes, we're seeing the...
Which is weird, I will say. When the war just begun, the market was not shrugging off geopolitics, that is for sure. But for some reason, the market just does not care, and AI just keeps running the way it's running.
Move higher in crude oil again this morning on the comments, and this idea that maybe perhaps you see a re-escalation to get to de-escalation, given the loggerhead we continue to see in the Middle East right now. China summit seems like a little bit of a nothing burger, dare I say, at least based on the information we have publicly. What matters to this market going forward? How much of this is NVIDIA? How much of this is a SpaceX IPO? How much of this is something else?
Well, I think that the nothing burger is a good thing. I think that nothing really coming out of China, I think, was probably what was kind of healthy, because I don't know. He went over there with an agenda. Maybe he met the agenda. We don't know. But, I agree with Dan. I think NVIDIA is going to go higher. I think that the trades that we're looking at are very, very positive. I'm really bullish on the market, but I think one caution that really throws caution to me is where the 10-year Treasury yields were headed over the past couple of weeks as they've headed higher. Is this an inflection that inflation's coming back? We sort of poo-pooed it last time that, it was transitory. Well, maybe it's not going to be transitory this time, but this energy effect, the cost of energy going up is getting to be a real deal that we're going to have to deal with. And it is the supply and demand issue, but energy is something that needs to be looked at. Inflation still needs to be looked at, and this 10-year Treasury yield going up needs to be looked at. So there is some caution that needs to be taken here.
Affordability versus...
Totally agree. Definitely err on the side of caution, but there still is a bunch of money to be made with AI for the rest of the year. I completely agree with what they're saying.
This is AI. This seems to be the nexus of the tug-of-war for investors here. Finally, Vance, I just want to get your thoughts on some of the names that you like here, because they're names that have already seen some pretty strong moves, but also I think arguably speak to the secular growth trends that we're talking about, whether it's Micron or Rocket Labs or even Cummins on the industrial side with AI build-out.
And, and if you're looking at engines like Cummins, I think that's going to be a great play, especially for these data centers and what's going to be needed. But, you can also play it with an ETF, PAVE. They've got sort of a combination of different infrastructure stocks that are going to benefit from these data centers that are being built, everything from Caterpillar to Cummins engines to, concrete that's going to be needed. So I think there's a lot of great opportunity out there that's going to take place.
Yeah, I mean, you got to think you're going down the line when it comes to AI. There's, you got to build out the data center. You got to get the energy. There's so many things that go down the line. And to his point, there's a lot of ETFs that cover this as well. You look at SMH, semiconductor ETF. There's a lot of ETFs that are covering data centers now. Rocket Lab, maybe we have data centers in space. You never know, but cool reaction for today. That's all that we have for today's video. If you guys enjoy, be sure to smash that like button. Also subscribe to the channel. Be sure to check out the Patreon and Instagram link down below. I'll catch you guys in the next video tomorrow. Peace.